Hello everyone, how's it going? In this video, we will talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very exciting and interesting stock to trade recently, with a high volatility providing opportunities, as well as many ongoing projects that may fuel speculations in the months and years to come. Now, at the same time, Mullen has been having some difficulties proving to the market that it is a serious company that investors can put their money into for the long term. In this video, we will go through the latest fundamentals, the price actions, and my analysis as well as my recommendation to hopefully help you make the best decision possible. As always, if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links in the description. Before we begin today's video, I'd just like to state a brief disclaimer, which may clarify what this video is about and what it shouldn't be. What is presented in this video are going to be my opinion or my interpretation on how things are and will be. They should not be considered as investment advice and should be watched for entertainment purposes only. It might be able to help you to make more educated decisions, but shouldn't be used as the sole material for decision making. Most of my analysis is done in the immediate past or just a few days before the uploading of the video. And if you see that the price action no longer reflects what you see on the chart, then it doesn't really matter that much because either way, I'm using it as a tool to analyze the momentum, which should stay relevant even after the fact. Also, the analysis will try to cover the stock as comprehensively as possible, and it'll talk about more factors than just the latest news or the price actions. For example, we will talk about the company's fundamentals, the financials, the stock market trends, the long-term perspectives, and the shareholder behaviors. These are going to affect the timing, the quantity, and the actual decision later. Since most of my viewers will be watching this video for the first time, it is important for them to consider all these factors. So, with that being said, let's begin with today's video. Mullen operates in the EV manufacturing, distribution, and marketing. It acts as a holding for several brands and companies they may purchase along the way. The latest example include the Elms and Bollinger. Mullen first began operating in 2014 as a successor to Coda Automotive. Another previous venture from Mitchell was called Mullen Motorcars, which developed Mullen GT, one of the world's earliest EV supercars in the market back in 2007. Overall, there are about 5 different ventures that Mitchell has, been able to operate over the years, one after the other. Now, we can say that on one hand, he might be a veteran in the field. On the other, I think that it's also a fair question to say that, or a fair question to wonder, how come he has failed all those ventures before? Now, we understand that EV can be a competitive field and also very capital intensive. But still, if he managed to fail 4 companies before, has he learned the lessons from them? Or did he just use them as a hustle to get more money from the shareholders? So these are the questions that Mullen has to answer in the month and years to come. And so far, I'm not sure that they have given us that much of a convincing answer just yet. For additional details, I would invite you to read Hindenburg Research's opinion on Mullen. Basically, they believe that everyone involved in Mullen has been, convicted of fraud before. So like the shareholders number 1 and 3, for example. And also, Mitchell seems to only have past experiences in the entertainment industry. He doesn't really have an engineering background. So all these things don't necessarily help the case for Mullen. And also, the question is whether they have the means to stay in the game. Like I said before, the sector is competitive and capital intensive, and it also relies on other industries that may have uncertainties of their own. There are also the long-term challenges of keeping the valuation multiplier as high as possible, avoiding the classification of industrial operators or car manufacturer. So the recent price action has seen Mullen price hovering around the 27 cents level, which has been able to hold to the support level of 26 cents. However, the attempts of Mullen to go beyond the psychological level of 30 cents so far haven't succeeded, as we continue to see significant downward pressure coming from the people short selling the shares, as well as those who have lost their trust in Mullen's capacity to move forward. These weaknesses in the stock price are justified by the lack of trust people have in the long-term relevance of Mullen, despite the multiple announcements and ongoing projects that Mullen has, including the rollout of its own SUV, the distribution of delivery vehicles iGo in Europe, and the intention to provide vehicles to the military. So overall, the short-term price action demonstrates that the shares are slowing down their sell-off or retracement, and that the same force that has pushed it upward now decided to wait and see if they want to continue doing so at all. In terms of long-term price action, despite the recent upward momentums, the company has been having a mostly bearish trend over the past 5 years, having traded between $5 to $10 for years before peaking around $15 and finally falling to around the penny stock level in the recent month. What this tells us is that Mullen has been hard hit by the ongoing stock market downfall, and that its own fundamental weakness didn't help. This assessment has recently begun to change though, but in my opinion, it still hasn't reached a convincing level just yet, and that to a point still explains why Mullen is a stock that I would recommend to trade instead of investing in, regardless of the recent distribution contract or the short squeeze. The interest surrounding Mullen is the expectation to scalp a quick gain in matter of weeks from the short squeeze, not necessarily yielding dividends from its car sales in a few years, hopefully. With that being said, I also want to add that things may move very quickly and relatively, significantly as well in percentages and so on in such a young sector. So the idea of investing into Mullen shouldn't be ruled out completely. The online communities have been initially skeptical towards Mullen regarding its capacity to survive beyond a medium term if there is no more EV hype to fuel the stock price and to provide liquidity. The general mood has since then transformed into the high speaker of whatever the company announces, with a pinch of, I would say, optimism or blind optimism in the air, such as asking themselves whether Mullen is the next Tesla, or if Mitchell is the next Musk. Some have also expressed their worries about the lack of transparency Mullen has demonstrated in the past by not disclosing the identity of their commercial partners, as well as not saying much about their suppliers, including the company that's actually manufacturing their batteries, the same batteries that earned Mullen their initial increase of interest and demand in the stock market. Recently, the multiple announcements that the CEO gave to investors have rekindled some of the optimism, not just from a small group of fans, but also began to turn the public discourse in their favor. Basically, as far as their online footprint is concerned, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent the signal to the market to react positively. On top of that, the macroeconomic trends within the sector have been under pressure due to several reasons, including the increase of the interest rates, the capital flight from growth stocks to other options, the conflicts around the world, and the supply chain issues, as well as the expectation that there will be a recession in the world economy that has only been delayed by 2 or 3 years. Another factor to look at is how the flagship company of the sector, Tesla, has been doing. The EV sector is a relatively new industry, with much of it still in development. Very often, people determine whether they should purchase EV stocks based on whether Tesla is performing strongly. The idea is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of companies like NIO, Lucid, or Mullen follow a very similar trend to Tesla. Of course, Mullen doesn't always follow the same trends as other companies. This has played in its favor, but we have to be mindful of those factors because they will paint the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which may give us hints of decisions that the company may take in the upcoming periods. The company's cash balance has decreased somewhat, but for now it is not a major issue that the reserves remain at a decent level. The reason why cash balance is relevant to examine is because cash is used not only to finance the operations, but also to satisfy short-term obligations and maturity. If Mullen cannot meet these obligations, the company will be technically put into insolvency, with a possibility to be liquidated. To prop up the cash positions, companies have three options: get positive cash flows from operations, to take on more debt, or to raise the capital by selling the equity, in other words, diluting the shareholders. The liabilities of Mullen should have provided some encouragement to those who want to invest into the company, as it recently reduced its liabilities by $13 million. Nevertheless, it was also the same period of time when we saw the share price going from around 55 cents to below 30. So this price movement shows us that although it is a good news overall, it didn't really carry much weight in front of purely stock-related factors. Despite the price action downturn, I still believe it is encouraging to see the liabilities going down, as it decreases solvency risks as well as the amount of cash outflows by contract. The last element to look at would be the profitability of Mullen. This is one of the biggest weaknesses of the company and is, in my opinion, also one of the main reasons why Mullen has remained as a stock to be traded but not really trusted with long-term capital, especially from institutions like institutional shareholders. The company hasn't generated revenue for more than a year, and despite its best efforts to control the general operating costs, the lack of operational revenue will eventually dig a hole in its finances, forcing Mullen to either take on more debt, to further dilute the shareholders, or to make additional efforts to increase its revenue. Now, in my opinion, it's going to be options 1 and 2 that will ultimately be the ones that it'll have to take. Overall, the financials of Mullen shows us that a company wants to stay afloat, is willing and sometimes capable of controlling its costs. But on one hand, the amounts that we saw are just paltry sums at best compared to other EV companies selling cars like Tesla, NIO, Lucid, and so on. But we also should understand that what we need to see is the company's capacity to increase its revenue, which hopefully we will see with the iGo distribution contract in Europe. Now, regarding their shareholders, they're mostly retail, just like you and me. They're volatile and reactive to any price action movements, which makes Mullen a good stock to trade and to speculate with. There are some institutional shareholders, and their number is increasing, but it's still not significant enough for me to change my view that Mullen is good for trading and not really for investing just yet. So recently, BlackRock increased their holdings in Mullen, which is a significant development. But like I've said, I need to see additional signs in that sense to change my view about this company. At the same time, the lack of significant institutional participation, and by significant I mean above 30%, also means that I currently don't see that much trust from those managing other people's money. Not that it's always required though, because a lot of great companies are mostly owned by retail as well. Another major catalyst of Mullen is the significant size of its short positions. The reason why it is relevant is because the short positions will tell us what a significant portion of the market thinks of Mullen, and also whether there will be potentials for a squeeze. Currently, there are about 42.5 million shares been shorted against Mullen. A vast majority of them are traded outside of public exchanges, therefore by and to institutional investors and traders. The potential for a short squeeze is therefore significant. A short squeeze is a phenomenon observed when traders decide to collectively buy up the share price of a stock, forcing those holding the short orders to redeem their positions. The reason why they may have to do this is because the positions are borrowed from brokers, and the shares have to be paid back at some point. The redemption would act as a second purchase in the open market, which will push the stock to even higher levels. With that being said, it's really important to control the exposure to a stock regardless of how interesting the price action seems to be. At the end of the day, opportunities will always be there, but the capital might not be. Doesn't mean that the short squeeze will certainly succeed and that Mullen will necessarily take off. It doesn't mean that. On the other hand, with the information that we have is that this is a reasonable scenario to believe in. Okay, so I'm not saying that you should be putting a lot of money in Mullen. In fact, we're going to be talking about my recommendation and exposure in just a second. But perhaps this advice is mostly useful for a few weeks ago when Mullen went from, I think, 26 cents all the way up to 55 cents. And at the time, it was a bit difficult not to commit a huge portion of your capital in Mullen, hoping that it's going to go up. I understand that feeling, and it's also very important to know that these would be moments that you need to suppress that kind of reflex, because that's going to save you a lot of money. Now, the investor profile for Mullen would be someone with a very diversified portfolio, willing to take on risks, who believe in the long-term relevance of EV, and who also believe in the upcoming fundamental news that will be positive for Mullen, and who also believe somewhat, I would say, in the short squeeze. So, over the next couple of days, Mullen needs to demonstrate its capacity to not only keep what it has gained so far, but to eventually be able to continue going above. So far, it's been a few days since Mullen held its ground around 30 cents, or in this case, maybe more like 27 cents. It would be best indeed if we get to see at least another few attempts from the trading volume and the demand side to determine whether an entry point can be reached. For now, I would say that a current price can be a decent entry point for those who are risk tolerant. If you would prefer to wait for additional confirmation, then definitely do that and keep an eye on Mullen around late November. The exposure I would recommend in Mullen should be between 0.5 to 1% of your portfolio.